Introduction and Investment Thesis. When I last wrote about Palantir, Nasdaq, PLTR, I had said that the company would have to work incrementally harder in Q4 to beat its revenue target in order to keep its revenue acceleration trend alive. Palantir reported its Q4 FY24 earnings in February, and not only did the management smash its revenue expectations, growing its revenue at an accelerated pace of 36% and outperforming its own guidance by a whopping 7.6%, but they also projected for FY25 revenues to accelerate further at a pace of above 31% for the full year. With U.S. commercial revenue driven by AIP, artificial intelligence platform, to maintain its growth rate at 54% YOY. The way I see it, Palantir is looking a lot like Nvidia, Nasdaq, Nvidia, back in 2022 at the onset of the AI revolution with the launch of ChatGPT. Since the beginning of 2025, Palantir stock has gained over 27%, hugely outperforming the S&P 500. This is despite its 20% plus correction since its peak in mid-February to its current levels. With Nvidia's CEO Jensen Huang outlining that the demand for compute is about to grow 100x higher than anticipated with the proliferation of reasoning models, I believe we are about to see an explosion of organizations building with AI, ushering in the physical and agentic AI era. In all of this, I believe Palantir's AIP is uniquely positioned to continue to help organizations unlock the potential of commoditized large language models into measurable business impact across use cases. As a result, the company has received a wave of revenue upgrades over the last 3 months, with revenue growth expected to remain in the low 30s range in the coming 3 years. Plus, the design of its go-to-market strategy around AIP is highly efficient, thus enabling the company to unlock operating leverage at an accelerated pace while getting further ahead with its lead on its Rule of 40 score. Sure, the stock is expensive on every possible metric. However, based on my valuation model, I believe it justifiably deserves a premium as earnings are likely to grow at a compounded annual growth rate of 50% over the next 3 years, per my estimates. As a result, I am initiating my first position in the company and rating it a buy with a price target of $136, representing an upside of 40% from its current levels. Palantir wows investors with revenue acceleration across its commercial and government segments. When Palantir reported its Q4 FY24 earnings in February, revenue growth accelerated from the previous quarter at 36% YOY to $828 million. This not only kept the revenue acceleration trend alive since Q2 FY23 but also beat management's guidance by a whopping 7.6%. I will also point out that its full-year FY24 revenue came in at $2.86 billion, growing 29% YOY. This is over 1% higher than what the management had guided for at the start of the fiscal year. The outperformance in revenue growth was led by a combination of Palantir's U.S. commercial and government revenue that grew at an accelerated pace of 64% and 45% YOY, respectively. I will spend some time digging into performance highlights in each of Palantir's business segments below. Starting with the commercial segment, it grew 31% YOY, contributing close to 45% to total revenue. Within the commercial segment, the U.S. commercial subsegment experienced phenomenal growth at 64% YOY, contributing over 57% to total commercial revenue, offsetting the weakness from its European subsegment. Q4 FY24 Investor Presentation: Growth in U.S. Commercial and U.S. Government Revenue. During the quarter, AIP continued to fuel customer acquisition and expansion, with Palantir's CTO Shyam Shankar attributing their success to the competitive advantage that enables rapid and scalable AI deployment. In fact, if we look at the U.S. commercial customer count, it accelerated a jaw-dropping 19% YOY to 382, putting aside any concerns of a slowdown. Q4 FY24 Investor Presentation: Acceleration in U.S. Commercial Customer Count. With Palantir closing a record 129 deals over $1 million, out of which 58 and 32 are over $5 million and $10 million, respectively, this is what Ryan Taylor, Chief Revenue and Legal Officer at Palantir, said during the earnings call that further underscores management's confidence in AIP to deliver superior outcomes for their customers as the AI revolution intensifies. AIP continues to fuel new customer acquisition as we have nearly 5 times the number of U.S. commercial customers as we did 3 years ago and significant expansion opportunities at existing customers. Organizations who have crossed the chasm with Palantir are driving real impact quickly. In this AI revolution, the biggest risk is not moving fast enough, and organizations are looking to us. With Palantir, as soon as work begins, we're delivering real quantified exceptionalism for our customers. Moving on to its government segment, revenue also re-accelerated from the previous quarter at 40% YoY growth to $455 million, contributing close to 55% of total revenue. Out of the $455 million in government revenue, U.S. government revenue grew at an even faster pace of 45%, contributing over 75% to the government segment. During the earnings call, the management announced customers in its inaugural Warp Speed cohort, where companies such as Anduril already reported having seen a 200x efficiency gain in their ability to anticipate and respond to supply shortages. Meanwhile, other notable deals included extending its partnership with the U.S. Army to deliver Army Vantage capability in support of the Army Data Platform for up to 4 years, along with contract expansion with the U.S. Special Operations Command that will mark the first deployment of Mission Manager to U.S. Special Operations Forces units. This could be just the beginning. In case you are wondering whether forward revenue is about to normalize after the knockout performance, you are in for a surprise. For Q1 FY25, the management guided for revenue to be in the range of $858 to $862 million, which would represent a year-over-year increase of 35.6%. While that technically translates to a sequential slowdown, the company would need to beat its revenue forecast for the quarter by roughly 0.3%, which is not too difficult in my opinion, especially given its track record and momentum. Meanwhile, for FY24, Palantir expects revenue to be in the range of $3.741 to $3.757 billion, which would mark a year-over-year growth rate of 31%, higher than its FY24 revenue growth rate of 29%. It doesn't end there. After a 54% YoY growth in its U.S. commercial segment in FY24, the management expects a repeat in FY25, maintaining its expectation for the growth rate in the segment at the same level. The way I see it, Palantir is likely where Nvidia was in 2022 when the AI renaissance started with the launch of ChatGPT. This is especially true given the success of AIP, which enables organizations to unlock the potential of commoditized large language models into measurable business impact across use cases. In fact, we are likely to see an explosion of organizations building with AI, as the cost per token for inference drops substantially. Furthermore, if we layer in Jensen Huang, CEO of Nvidia, he made it quite clear during the company's recent earnings call that as we see a proliferation of reasoning models, there could be a 100x higher demand for compute, ushering in the era of physical and agentic AI. Palantir's management reiterated that they built AIP to spearhead enterprise autonomy. This is what Shyam Shankar said during the earnings call, where he stressed the importance of Palantir's ontology as a competitive advantage that enables them to work across industries to drive productivity gains and cost reductions. From the beginning, AIP was built for this reality. Chat was always a dead end. Instead, we viewed LLMs as a new runtime for the AI labor. To capture the productive value of this AI labor, you need an intermediate representation of your enterprise that AI can actually interact with. How do you allocate inventory, onboard customers, process claims, call for prior authorization, and the like? That intermediary representation that makes all of that possible is ontology, and that's why it's been the secret to our meteoric rise. We are convinced the normative value for AI is enterprise autonomy, the self-driving company. Users go from performing the workflow to supervising an army of agents, teaching them how to handle edge cases and reducing 12 time. This is where we are maniacally focused with our customers. Plus, over the last 3 months, Palantir has received 18 revenue upgrades and 0 downgrades, with consensus estimates now expecting revenue growth to remain in the low 30s range over the coming 5 years. If you look carefully, analysts have raised their revenue expectations for FY25, FY26, FY27, FY28, and FY29 by 13.4%, 20.2%, 29.2%, 57.5%, and 85.3% over the last 6 months, further validating the company's underlying growth thesis and investor optimism. Essay: Forward Revenue Revisions by Analysts. Rule of 40. Supremacy is a cherry on the top. Shifting gears to profitability, Palantir generated $373 million in adjusted operating income, growing 78% YOY with a margin expansion of 900 basis points to 45%. On a sequential basis, adjusted operating margin also expanded by 700 basis points, thus highlighting the company's expanding operating leverage from its underlying operating model and growing spend per customer. For the full year FY24, Palantir adjusted operating income stood at $1.13 billion, 34% higher than the management's expectation of $842 million at the start of the year. In fact, their revenue and profitability growth drove a 13 basis point sequential increase to a Rule of 40 score from 68 in Q3 to 81 in Q4, which is unmatched by any other company in the enterprise software sector. Q4 FY24 investor presentation, gaining further higher in the Rule of 40. In my previous posts on Palantir, I have discussed at length that it is Palantir's unique go-to-market approach through its AIP bootcamps and AIPCon that allows it to efficiently manage its operating expenses and unlock tremendous leverage as a result. When we look at forward guidance for adjusted operating income, the management expects Palantir to generate $1.551-1.567 which would translate to a year-over-year growth rate of 38% with a margin expansion of over 250 basis points to 41.5%. However, if the management beats its adjusted operating guidance in a similar magnitude to that of the previous year, we could be looking at a much higher operating margin in the 50% plus range. Revisiting my valuation, 40% upside remains. Looking forward, I will use management's forward estimates for revenue growth in FY25 of over 31% followed by consensus estimates in the years after that. This will translate to a total revenue of $6.4 billion by FY27, driven by AIP demand across both its commercial and government segments, as we see growing AI adoption across enterprises with favorable economics creating the incentive to develop AI applications across use cases. From a profitability standpoint, I will assume the company will maintain its adjusted gross margins at 82% in FY25 and beyond. Meanwhile, when it comes to its adjusted operating expenses, Palantir just saw an increase of 2.5% in FY24. Assuming it keeps its adjusted operating expenses growth rate anchored between 5 to 7%, given the design of its highly efficient go-to-market strategy centered around AIP bootcamps and AIPCon, we should see its adjusted operating expenses decline as a percentage of revenue from 42% in FY24 to 23% in FY27. This will translate to its adjusted operating income growing from $1.128 billion in FY24 to $3.76 billion in FY27, translating to a compounded annual growth rate of 50%. Please note that my expectation for adjusted operating income for FY25 is roughly 14% higher than management's expectation, which I believe it should be able to beat, given its past track record. Over the next 3 years, we should see its adjusted operating margin expand from 39% in FY24 to 58% in FY27. Assigning a price-to-earnings ratio of 100, which is roughly 6 times the average S&P 500 multiple given the highly superior growth rate of earnings, we arrive at a price target of $136, representing an upside of 40% from its current levels. Author's valuation model. Risks to my bullish thesis. There is no doubt that Palantir is trading at the highest multiple in the enterprise software sector. For a forward projected revenue growth of 31% for FY25, it is trading at the highest NTM, next 12 months, revenue multiple, as can be seen below. Altimeter Capital, NTM revenue growth versus NTM revenue multiple. While this points to elevated investor optimism on the company's future growth prospects, it also leaves very little room for execution error. But if Palantir is really where Nvidia was in 2022 at the onset of the AI revolution, we know that traditional price-to-earnings metrics will do little justice to capture the stock's full potential. At the same time, we also have to be mindful that despite the bullish thesis surrounding the projected surge in compute demand from the proliferation of reasoning models, there may be a timing lag in widespread enterprise adoption and deployment of AI applications. This could add another layer of volatility for the stock. Finally, Europe continues to be a weak spot for Palantir, where commercial revenue is growing at a significantly slower rate than in the US. Meanwhile, there are uncertainties pertaining to the current macroeconomic environment. However, Shyam Shankar made it a point to reiterate that Palantir thrives on disruption and that their offerings are in alignment with the government's focus on efficiency and modernization. Finally, on the topic of China, the management reminded investors that they are in an AI arms race. With tech giants committing to over $300 billion in AI spend in 2025, I agree with the management that Palantir remains an unlikely winner amid macroeconomic disruptions. My final verdict and conclusions. While the premium valuation of Palantir has created a lot of polarity around the stock, I believe that we are at an inflection point in the AI revolution, where the value shifts from the infrastructure to the application layer, especially as the cost per token of inference drops substantially, leading to an explosion of organizations building with AI. I believe that Palantir will continue to be the biggest beneficiary in enterprise software in the coming years, as revenue growth is expected to remain strong, while margins expand at an accelerating pace. Assessing both the good and the bad, I am upgrading my rating to a buy, with a price target of $136. I am